at some future market activity. Going forward in the future, you can see it 60-40 and 60-50, 69-40, 69-50, right where I have my quarterly ones. The 0 DTE came in right there on my ones, 69-40, 69-55. And also, the end of the quarter is at 6,800. I need to put you on hold for 1 second. Hold on for 1 second. I'm going to have to wrap this up real quick. Sorry about that. Um, Today we went down to the daily one, the lower daily one. We did get up to the 17 VIX as we anticipated, and then it just flattened out. So 6,800 is going to be the level to beat on ES. We have that 6-month one. It's an R ball. And we went right up to it, touched it, pulled back. Hold on for me one quick second. Hold on for me 1 second. Apologies for that. The 6-month one is an R ball. So I was expecting it to break, but not the first touch. So it did pull back. SPX has the H fall right here. This is the 6-month 2. H fall at 67.30. 67.46, 67.47 is the H12 14 6-month. So we're at, maybe we could get up 20 points to that 6,800, but maybe not. There's not very much option activity to guide us. That's what I was looking at. 6,800 is the high volume, but really it's 11,865 today. Um, it's not too much after that, although it is starting to stack in a little bit. The downside would be that 6750 put. That is a put, isn't it? No, that's a call. Okay, 6750 call it. That's interesting. Our put here is also at 6750. So 6750 is the 6745, 6760, and then 6700. Um, and we reached 6750 right here today. So the market definitely wants to get that 6800 before it pulls back to get this 6750 for the SPX. But then I know that we're going to be getting this pullback anytime for, maybe not 10%, but 5% pullback or thereabouts. You can't go exact percentage like that, but I do feel that we're close to maybe, getting the upside volatility because we broke above the 6-month 30-day mean. Not the 6-month, I'm sorry, the 30-day mean on the VIX. So 1661 is my line in the sand for that. And we bounced right between the 37-day mean and the 30-day mean at 1595. And now we're pushing that 30-day mean to the upside. So, I've got 19 VIX and 20 VIX on my mind. And that is, the most logical path to the upside. So we didn't quite, touch 17 today. And what I would like to do real quick while I have you here is go back to the quick options. Sign in. Okay, put it on dark. Come over here to our GEX and then take a look at tomorrow or next week. And we still have that 17 VIX for next week. Overall, we are at negative GEX if you factor in all contracts. But if we reset and just look at the one period for next week, it is positive. And then after that, it goes back negative. Well, it does say positive to 19 on the 15th. So we go from 17 to 19. And then back down. So by the end of October, so just going to OPEX, the 15th, we have this 1719. So we have some upside volatility coming short term. See if I can get this to go back. Yeah. 21 is the ball dampener. So 19 is the target for OPEX. And that gets us right here to my 37-day one. And as we noticed, we have the ball dampener at 21. So we won't be going past 21. And that, no wonder, is the last. It's a 30-day one. Here's your 23. So we have the 23 in the middle, 37 on the bottom, and 30 on top. So a little bit mixed up here, but those are the targets. So we may or may not get that 6,800. If we come back and breach this high right here at 67.82, they're definitely going to be using that as a sell premium event. 6-month one R-ball, the one period, is about the cheapest premium that they could sell. So that's why I knew that they would be attracted to it today. So I'm not sure how much open interest, would be necessary. We can't see the prime dealer order book anyway. And it's only market makers that are at those other open interest levels, or hedge funds or things like that, not the prime dealers who are setting the market as far as pinning these levels. So with this thick 6-month two here, and I could make this thick, it's a 6-month one, that was pretty much a no-brainer today for that sell. And if we, continue slip sliding, it will be, you know, waiting for that lower end to break. And for myself, it's going to be 67.42.75, 67.50 to 67.42.75. That was your 2-day one, which is tomorrow. And if I put my 1-day one back up, I had it here at 67.43. So 19 points from the close. So 19 points below 67.67. 67.48. Look how well that lined up. 67.47, and we had 67.42. So within 5 points. Right there. Those are my go lines for tomorrow. Those are my break lines for that, get short. below that. All right. Sorry for the noise. And for the confusion earlier on that SPX, I did not see those strikes up there, the JHEQX short call sitting up here between the 6-month threes. And at first, I didn't see any volatility or open interest at all up there, and it was scaring me. But it's up there. Um, the reason there's no open interest between now and then, the reason I was saying nothing was there is because, most of the contracts now are 0 DTE. So they're not spreading it out over monthly or weekly anymore like they used to, like I was used to seeing. Um, it's either, going to be all quarterly or um, 0 DTE or that 6-month, of course, JHEQX, end of year 7,000, which is right above the 69.63, 69.65, 55, 69.55. Yep. All right. And it's interesting that their long call is sitting right below the 6-month ones. Very interesting. In fact, if we fib between the R vol and the H vol 6-month, we might find the pullback line somewhere around 65.57, something like that, or 65.70, 65.60 to 65.70 would be a good place to watch for that pullback. All right. For the market that doesn't pull back, it just wants to keep going higher. All right. We're getting a pullback. It's just, get below 67.42 to confirm it. Thank you so much. I hope you'll have a good evening. And appreciate you. We'll talk to you tomorrow. Good night.